the smart investors start reallocating money out of bonds and into Bitcoin. And then that's it. That's like Bitcoin will gain so many assets. Like it will be the total market value could double, very rapidly. As it stands here today, it appears we've hit a local bottom in Bitcoin down at the $75,000 range, and we've recovered from that, and now we're bumping up against some serious resistance at the $88,000-$90,000 level, and we've got to kind of break through that mentally and hold that for this to stand. But I think that Bitcoin's catching a wave like similar to gold, where you've got investors who are putting money in both gold and Bitcoin.
James Lavish kicks things off with a stark warning about the state of the economy. He lays out a scenario where rising debt levels, mounting interest payments, and unsustainable fiscal policy lead not just to market turbulence, but to a full-scale financial reckoning. Lavish argues that if the system begins to crack, the Fed will have no choice but to intervene with aggressive money printing. But here's the catch: this fix could spark even more inflation, destroy purchasing power, and ultimately erode trust in the entire financial system. It's a high-stakes balancing act, and according to Lavish, we may already be running out of time. Take a moment to like this video, subscribe to the channel, and turn on notifications for more content on Bitcoin and the digital asset space.
So I think it's a combination of things, Marty. First of all, I think, unless we get another meltdown of the market where everything correlates to one, and that's just reality. The only thing that may not go down in that case is gold, but I think that even gold would, because when everything correlates to one, it means that you're getting margin calls everywhere, and you sell what you can, not what you want to, and so everything ends up going down because you have to get cash to meet margin calls because everybody's levered. So in that case, Bitcoin will go down. But as it stands here today, it appears we've hit a local bottom in Bitcoin down at the $75,000 range. And we've recovered from that, and now we're bumping up against some serious resistance at the $88,000-$90,000 level, and we've got to kind of break through that mentally and hold that for this to stand. But I think that Bitcoin's catching a wave like similar to gold, where you've got investors who are putting money in both gold and Bitcoin, and that the US dollar being weaker is making Bitcoin stronger as well. And so it's a long way of saying that the decoupling, I appreciate it. I like it. I want to see it continue. And we're going to have to see, weeks and months of this for it to really hold. But it's that information, understanding arbitrage you were talking about. And that's really what's going to drive this long term. And that's going to make people understand that Bitcoin is something that should be allocated separate to every other asset class out there. If the stock market blows up, really blows up, we are headed for a deep recession. And the only way we can pull out of that is by printing more money. So what happens to bond yields? Bond yields will go up in that scenario because the bond traders, the vigilantes, are going to want to be compensated for the clear and obvious inflation that's going to come from another expansion of the money supply. And so that's the issue here. So do bond yields go down to 2% because we just slowly grind into a recession here? Or do they spike up to 5-6% because we have blown up the economy and the Fed's turning around and printing money to oblivion to save it? It's a good question. And that's why you're seeing a lot of uncertainty in the market. People don't know where we are on that spectrum. And some of it has to do with, headlines and a tweet, from Trump. He could just tweet something that just spooks the market to the point where, you have the NASDAQ sell off 3 or 4%. Oh, well, look at that. It's down 2.5% today. It was down over 3% earlier, I believe. But here's the telling thing. The telling thing is that bonds are not acting like they should as a flight to safety. That's number one. And number two, gold is absolutely ripping higher, rocketing higher, because it is a flight to safety. And investors are looking for a place to put money to just protect it. And gold has been a strong store of value for centuries. And now we get to the question about Bitcoin. And Bitcoin diverging today is very interesting. It's interesting because is it following gold? Is it finally, are people just realizing, like you said, that arbitrage, is that closing, that understanding arbitrage? Is it just because the dollar is so weak, which means that the dollar Bitcoin price goes up? That's part of it.
According to James Lavish, the United States may be preparing to sell bonds backed by Bitcoin, a daring step that might assist stabilize the treasury market and provide the government with a means of implementing Bitcoin nationally. If the Fed continues to add money to the economy, this might become necessary. The stakes are enormous for pension funds and investors. It's becoming evident that traditional bonds aren't meeting their needs for returns that surpass inflation. Lavish also notes that other nations are taking notice. Even if trade tensions and tariffs make the news, the actual action might be taking place behind the scenes. Bitcoin is beginning to be recognized by governments as a strategic asset that is essential to both financial independence and national security. The quick increase in Bitcoin's hash rate, which is mostly not coming from well-known public mining operations, may be explained by the possibility that some people are already mining and hoarding it covertly. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
The smart investors start reallocating money out of bonds and into Bitcoin. And then that's it. That's like Bitcoin will gain so many assets. Like it will be the total market value could double, very rapidly. Now I still believe that's a little bit of ways off because of what you said in your tweet earlier, your post earlier, which is there's an understanding arbitrage, there's an information arbitrage. People are not getting it yet. But when they do, and it does decouple completely and it starts acting a lot more like gold does, but it's gold on rocket fuel because it's in its adoption phase. And of course it's going to have its volatility because any asset in adoption phase is going to have a volatility. But volatility to the upside, of course, you and I have talked about this both before, it's a gift. A volatility is actually attractive in a rising asset because it gives you the opportunity to dollar cost average in or find spots that if you're a savvy investor, to find spots to add extra capital during those super volatile periods. So I believe that's the key though. When you start seeing investors reallocate out of bond portfolios or out of their bond allocation into Bitcoin, man, that's it. That's going to be that to me is where that's really that's the pool that once Bitcoin starts drawing from, it's a $330 trillion pool. Once Bitcoin starts drawing from that, lights out, game over, watch out. I would not be short this thing. So it's very interesting. And that's it, the game theory. And that goes back to, the United States is signaling, a very strong signal that they're going to be buying Bitcoin here at some point. And it's, we've got people in the administration who understand it. I don't know how well Trump understands it. That's kind of beside the point. But Senator Lummis understands it. Besant understands it. Lutnick understands it. Like, these guys get it. They understand what this is and how important it can be. And so we were talking about before, the Bitcoin bonds. Yeah, that could be a very important way for us to monetize this new asset for the United States and stabilize a treasury market that could get unruly here if we continue down this path of money printing to save the treasury market over and over and over again. And so treasury traders, investors are going to demand, they're going to need a higher return. Pension funds can't meet their obligations unless they have a return that's matching inflation or better. So that becomes a big challenge for them. So the point is that other nations they're not asleep at the switch here. They're watching this. There's a lot of confusion, a lot of noise about the tariffs and all that stuff, but they are listening to what the United States is doing. They're watching this. They're saying, man, if they corner this Bitcoin market, and it really does continue to be nation state level resistant because of the amount of energy it would take to, create a fork or whatever, then they have no choice. That's the game theory right there. But to just start doing anything they can to accumulate themselves now. And I believe that has begun. I don't know how how large, how widespread that is. We could just have a couple very large nation states doing it, and that's why hash rate is screaming higher. But it's not the public miners that are doing it. They're not out there pushing hash rate up like this. It just doesn't make sense.
According to James Lavish, the United States is quietly signaling that it may soon start accumulating Bitcoin, possibly through Bitcoin-backed bonds. These would be a game-changing financial tool, allowing the U.S. to strengthen its treasury market while giving Bitcoin a formal role in sovereign finance. With people in key positions of power like Senator Cynthia Lummis and figures from Wall Street already understanding the value and strategic importance of Bitcoin, it's becoming harder to ignore. Lavish explains that if the Fed keeps printing money to support the treasury market, traditional bond yields will no longer satisfy the needs of pension funds and large investors who require returns that at least keep pace with inflation. Bitcoin could be the solution, offering long-term upside and serving as a hedge against ongoing monetary debasement. However, the United States is not alone. Lavish cautions that other nations are closely observing. Behind the scenes, nation-states are secretly planning as trade disputes and tariffs divert media attention. They perceive Bitcoin as a censorship-resistant, energy-backed monetary network that has the potential to be a potent instrument for achieving financial independence. It's possible that some nations are already secretly collecting and mining Bitcoin, which might account for the sharp increase in the global hash rate, a large portion of which isn't coming from open mining firms. According to Lavish, this heralds a quiet scramble to amass Bitcoin before it's too late, politically or financially. And as always, happy investing.